companies don't die when they run out of money. They die when founders give up.
Yeah.
And what I've learned firsthand is that...
Before we go deeper, there's a special thing about this podcast.
Oh, great.
Where we play games. We have NASCARs.
Awesome.
And Ford Speed Champion.
Amazing.
So which one do you want? Do you want NASCAR or do you want Ford Speed Champion?
I like this one a lot.
All right, let's go. Do you think founders are dooming themselves by taking venture capital?
I would say it depends on their vision for their company. There's some kind of like crack in a door that you've noticed and you think that door is going to close and you need to take that opportunity immediately while you can. That's a good opportunity for venture capital. But at that point in time, even if you sell your company for millions and millions, hundreds of millions of dollars, does not necessarily mean that you are going to make money.
How do you think about culture now that you've been building a company 9 years?
What I've come to realize is that the value statement is at the top of the pyramid, and the things that flow down from that are the system of behaviors and actions, norms, and having that does create some relief because as a CEO, it's tempting to think that you need to make every single decision.
Yeah.
That's not really your job, right? I think it's a great time to be thinking about entrepreneurship. There will be smaller opportunities for entrepreneurs to, you could almost call it like a micro business. Like if you're able to find enough customers to pay you $50,000 a year, that might be a better path for a lot of people than trying to go find a job.
Yes, that was a great answer, but I have a very hard puzzle piece I'm putting together.
Yeah.
Well, you're like going faster than me. Well, see, I've got
a perfect metaphor.
I've got practice.
This is a perfect metaphor of entrepreneurship. I'm going faster than you and I'm making just a piece of nothing.
Have you noticed my Lego man looks kind of like me?
Oh, that's good.
Hey, Evan, welcome to Not Another Podcast. Thanks for coming on.
Thanks for having me. Good to see you.
Would love to just break the ice with like a somewhat controversial question.
Oh, great.
But do you think founders are dooming themselves by taking venture capital?
No, I don't think so. But I would say it depends on their vision for their company and their ability to be eyes wide open about what it means to take venture capital. It's a very specific type of financing for a specific type of company, for a specific vision and lifestyle of the company you want to run. And I don't think that most founders have a good idea of what it feels like to do that unless they've done it before.
Like, can you tell me a bit more about like what is in the box for maybe like for a founder wanting to raise VC versus alternative methods? And like, I think you're a man that's lived many lives in the funding spectrum. And so, and you're someone I've known a long time.
Yeah.
What would be like your doomed venture path?
Yeah, I think the thing that most founders who have not raised venture capital don't really understand is that the venture capital is a business model.
Yes.
The venture capitalist that you raise money from has raised money from limited partners who they have made financial commitments to. There's an expectation that that money is going to grow at a certain rate over a certain period of time. And that's typically a very high number.
Yes.
And so they are looking at their fund economics and the fund dynamics of the money they've raised. And they're saying, okay, probably 9 out of 10 of these companies are going to fail because this is a very risky type of investment. And so every company that we invest in has to have the potential to make the whole fund back, or else it probably doesn't make sense to make that investment. So even in the fundraising process, when you're raising money from an investor and they're asking you these questions and they're kind of like, what's the biggest outcome this company could have? For a founder who has not raised VC money, it can even feel kind of like, how am I supposed to know if this company's gonna be worth $1 billion?
Yeah.
But when you understand the financing motivation there, it starts to make a little bit more sense. So if a founder goes in thinking, okay, we're going to raise a little bit of money, I'm going to kind of like run this business for a while, we're going to make it into a profitable thing, this is going to be like my company I'm going to run.
Yeah.
That tends to not necessarily be a great fit for venture capital. It's like, pedal to the metal, fast growth. And you start to get that pressure from your investors to do that if you're not hitting certain metrics, because for them to be successful, it also tends to have to happen under a specific time frame.
Yeah. So what... Like, obviously, AI is completely changing the way code's being built and the underlying value of code. And so the tech moat is compressed today. So I saw a headline today where, 2 founders right out of college busted through YC and raised a $60 million round.
Nice.
And I'm sure they have like great traction. And I'm like, that's something to be celebrated. I look at that and I'm like, oh my God, you have to figure out how to like 10x $60 million. while your underlying tech mode is being commoditized. Like,
Yeah.
can you tell me a bit about how you think of that in relation to the venture landscape? Because like it definitely has changed since like you and I were raising pre-seeds, 5, 6, 7 years ago plus, versus today.
The expectation is that the company is going to be on a trajectory of growth until there is a liquidity event for the
Yeah.
company. So if you raise money, if you raise $60 million and you, let's say, have like a 10x valuation on that, maybe it's like a $600 million valuation.
Yeah.
It's a pretty high number. It means that in the following financings that you do, you have to continue to increase that value. Usually there's an expectation of maybe even like 2x your valuation or more.
Yes.
So you're starting to think about like, okay, from where we are today, which is very early stage, things are going to change. We don't necessarily know what we're doing.
Yeah.
We need to hit a trajectory that's going to allow us to get to $1 billion valuation ostensibly in 18 months, right? Or 24 months, whatever that expectation is. It's a very high bar, so that's a path to take, but if you don't figure it out with that move, there's usually not really like a second shot.
Yeah. But obviously like for heavy R&D businesses, that might make sense, right?
For sure.
Like I know quantum computing, biotech, like you have to do a lot of R&D with scientists, but like specifically in software, I think that used to make sense. But now I feel like that's an incredibly risky bet because like the underlying thing that you're using to defend that valuation to 2x and 3x the next stage is tech. And that's like commoditizing, right? So
yeah, and I've seen a couple of plays recently where people are trying to build platform businesses where, it's kind of like the compound startup where you're consolidating a bunch of different kind of functional solutions into one platform and raising a bunch of money to try to do that. Obviously, that increases the complexity, but it's a move. I think generally, though, for the most part, trying to get traction, get customer validation, and see growth does not really require $60 million for most people. So it just sets a really high set of expectations for what your next move is going to be. Also, the fact is like you see that in the headlines, but that's not what most people are doing. So there's also almost like a perception thing where, hey, if you're not raising a $60 million Series A or even seed round, you're not going to make it. It's like, I don't know, man. That's not really what most people are doing.
I love the show Silicon Valley.
Yeah.
And they have like a whole episode where it's like, wait, I could have just taken less money. and there was someone tweeting about this the other day where it's like, can you tell me a bit about how a founder can calibrate the amount of money they're going to take? Like, should people take less money? How do you think about moats relative to like the valuation?
Yeah, I mean, that's a tough question because it kind of depends contextually on the business. I agree with what you're saying. There's some businesses that just need money up front.
Yeah.
Like you're building hardware or you're inventing a molecule or something like that. It does require the upfront investment. But for most folks, I mean, I think the traditional advice is kind of like build an operating model, back the napkin for 18 months and what you think you're going to need to invest to get there. Some people would say you should sell the least amount of your company as possible to get to the first big milestone of validation. Once you hit that validation, you feel like you've gotten to product market fit, then you really step on the gas. It's hard to come up with a number. I mean, the benchmarking around selling somewhere between 10 to 20% of your company in a round is also, I think, a decent rule of thumb. Yeah, I think people tend to need less humans today than they needed before to get things done. So I've seen people raising even hundreds of thousands of dollars for their pre-seed round, which is enough to help them fully focus their mental energy and space on the business. It's like if you have a team of people who are currently working jobs and you want them to join your team to work together, what is your kind of like personal burn rate requirements?
Yeah.
That's another way to kind of like bottoms up it. It's like, okay, this person is single, they're living in a rural place. This person has 2 kids living in New York City. Like you can kind of do some math and just figure out what is it going to take for all of us to focus on this business for at least 24 months. I think that's a good bottoms up place to start.
I think that's such smart advice. Like that's probably like some of the best advice. And that's why I want to double tap on it. Because I think so many people look at like going out and fundraising as the success metric. And it's actually like, you should be bottoms upping, thinking about what the minimal cost it is to get to a reasonable milestone because you're the biggest investor for your business. So I was just talking to somebody today and she was thinking about raising a round and she's building AI into a heavily regulated industry. She actually ended up not taking any venture and she's about to close a $600K contract. And my advice to her was just like, at this point, why don't you just push it above $1 million and just go get some classic debt without warrants? And I think that there's a big change going to happen in the market around, like this is the time for the bootstrapper. This is the time for like the seed strapper. And I know like you've lived in that shoe. Can you like, Monday morning quarterback it and like give us a take on like what you think the dynamic of AI is going to bring to the entrepreneurial journey?
Yeah, I mean, you made me think about our journey a little bit that we could talk more about, but we have at my current company, we've taken on multiple different types of financing at different times of the business. We can talk more about that. But I do think that AI gives you an opportunity to get something in front of your potential customer that is at least in the shape of what they might want to buy. So you go in and you identify a big problem.
Yep.
Where's the pain, right? Discovery. You're ideating, you create a hypothesis, and then you want to get to a prototype of what a solution could be that is the shape and model of what you think is going to solve that problem, and get feedback as soon as possible. And that is the space that I think the early stage entrepreneurs should be playing in with the most amount of their time possible.
Yep.
And if you can do that for free or for cheap, if you can do it on the side of even your current job, then great. As soon as you start to get those feelings of validation where someone's like, wow, this is really solving my problem. They're asking if they can pay for how much is it?
Yeah.
That's a good indicator. How much does this cost? You're
Yeah.
like, okay, you're thinking about paying for it.
Yeah.
Following that thread, I think is super important because it's very easy to go make a vision pitch. And I mean, I don't want to say it's easy to raise money, but for people who have the skill set of being a performer in a way,
Yep.
a storyteller, a visionary, they can go make a pitch to an investor. And in some ways, that becomes like the customer in that context.
I mean, I would say for like seed and pre-seed, like 100% the investor is the customer.
Yeah.
But then I think conversion into A and B is incredibly difficult.
Shifts very, very
And then
fast.
kind of what I'm like poking at in this is like, I think what you're saying is dead on. And what we used to do is like all that, and then we go raise a pre-seed. Now, what I'm seeing is happening, like if I could have told you 5 years ago that like people could go get $100 million or like $1 million contract without taking any venture capital, like you and I both would be like, no way, right? Yeah. And then now that can happen. So then what is that going to do to the venture ecosystem?
Yeah, I mean, I think venture capital is best used when you're like, this thing is working and we need to grow it really fast right now. Mm-hmm. Why is that? Like some legislation changed. There's some kind of like crack in a door that you've noticed and you think that door is going to close, and you need to take that opportunity immediately while you can. That's a good opportunity for venture capital. You're basically subsidizing what you think is going to happen in the future by selling part of the business today and creating that pressure cooker for yourself. Mm-hmm. But yeah, I mean, if you can go sell $1 million contract and you can actually fulfill it, pre-selling $1 million contract and then thinking about what do we need to do to actually deliver it. If you have that in writing, there are people who, will finance that.
Because like if you're a very credible person and let's say you like could sell into, whoever, and you have other engineers with you and you know how to code, like you in theory could build a full product and full company, and you have the vision for a full company. And then it's just like a time value of money thing from the invoicing thing. So it's like the age of bootstrapping.
Yeah. And I think early stage entrepreneurs, especially for folks who are doing entrepreneurship for the first time, they have this perception that everybody has their shit together. I mean, and everybody says that, but when you start to get into these contexts of, you work inside of a big organization, it's really successful, it's getting all the awards, you go sell $1 million contract, you're like, oh my God, this is amazing. You're like, surely these people have their shit together. No, it's like all the way down,
Yeah.
So I say that just to say that, that creates the perception of, well, we know we need to raise money. This has to be legit. Mm-hmm. We have to hire a legit team. All the code has to be tight. It has to be scalable. Yeah. This needs to, and it's like, not really. No one's really even doing that at the level of, the kind of Inc. magazine awards. It's like,
totally.
Yeah, you don't need that really.
But now with AI and AI tooling, that code is getting tighter and more complete. I think there's a day when you'll be able to do almost like a lovable motion, but the full backend will be done as well. And then essentially you could be a rainmaker of sorts, where it's like you have these business relationships, you have an idea, and you could create a whole business. Like Levels on X, he's a prolific product builder. He basically has created a whole portfolio of like semi-little AI tools, and like that's almost like an index fund of little AIs. And so like we could get to a whole world where entrepreneurs are just essentially like able to create and disrupt at a scale that I don't think like either of us has seen. So like, with all that, like, why take $1 of venture capital?
It's a very attractive idea.
Yeah.
I think people use the word taste. It's kind of like if you see something that's an opportunity and you can go after it, that is something that's going to become even more valuable in the future, is that creativity and
Mhm.
being able to nail the moment, nail what people need.
Yeah.
Um, I think maybe at a certain level of scale, there does need to be some backfilling of things like security and
Yeah.
scalability of backend, right? And I mean, we're going toward a world where maybe even that's, like you said, is
Yeah.
taken care of. But
I mean, I was just
yeah.
checking out a product today, called Gradient, and it was
Mm.
QA for people who were using like Claude
Oh,
and
yeah, yeah. The vibe
and
coding.
it was basically like QAing the code, right? And that's hugely valuable. And I could see like a world where there's an information security product that's doing the same thing, and like there's going to be services like we're exploring that if you take a vibe coded agent, like we'll take it and maintain it and make it better for you, right? And I think that like that's a whole motion.
Yeah.
And so I think we're going into a world where it's like if you have the idea and understand positioning really well, and you're able to sell and able to solve problems, like the world's your oyster, you know?
Yeah, and you see a lot of multi-time entrepreneurs actually going and doing that and playing with that, which is also kind of an interesting indicator.
Yeah.
It's like you see someone who's gone through the venture journey a couple times, and
Yeah.
right now they're just making apps. You see people building studios.
Yeah.
Even a lot of the venture funds I'm seeing are actually now building studios
Yeah.
inside of the fund. Right?
Yes.
I mean, you guys are obviously doing that,
Yeah.
but it's like, okay, well, we can do this and we don't need to go raise a ton of money to get these things off the ground.
I mean, I think it's about like, what is the opportunity cost to create an organic challenger? And then obviously you need positive selection rather than negative selection, right?
Yeah, and it also brings into focus the notion that luck is a big part of this. Timing is a big part of this. Very hard to play. As a founder, it's like the VC wants you to be all in on this thing for as long as possible to make the big win.
Yeah.
As a founder, you have this kind of other incentive to get as many at bats as possible. And when you start to run multiple companies, you see it. You're like, oh, from this one to that one, I did everything wrong. I would do totally different.
Yeah.
And so if you're able to diversify the number of things that you have out there, it's like there's this big misconception that like it's a skills gap.
Yeah.
It's often really not. A lot of companies will succeed despite the fact that the team doesn't have it together. They don't really know. They're not hiring the right people, but the market's just like pulling out of
That's why I hate the 7 days a week work thing. That's like all the rage on X right now, because I'm like, it's honestly it's so insulting to be like, oh, you can find power law if you just worked an extra 8 hours a week. Like, it's like, no, we are all in the desert trying to find oil. Some of us who are like not so inclined, you have like a 1% of finding oil. Like the best entrepreneurs in the world maybe have like a 25% chance of finding oil, but like we're still just like in the desert hunting and digging. And like, I think that's a really key part of when you choose to raise VC, it's like giving you gas to go hunt for oil.
Yeah.
But like the more you raise, the more oil that you need to find. And so like if you're more of like an AI bootstrapper or a classic bootstrapper, you could go and dig little holes and find some little bits of oil. And like could be very, like the oil shale could be very profitable for you.
Totally. I mean, and what I was thinking about as you were saying that is that, and this is something that I think a lot of people actually don't realize, is that when you raise money, you are diluting your ownership in the business. When you raise multiple rounds over time, you're continuing to dilute your ownership in the business. At that point in time, even if you sell your company for millions and millions, hundreds of millions of dollars, it does not necessarily mean that you are going to make money. So even in the press, when you see like this company just got sold for $1 billion, it's like no one's really showing you the cap table of what happened there, right? So even if you beat the odds and you get to this like unicorn, it's like even then it's not a guarantee. So I do think it's really cool that there's such an opportunity now for people to just build things and put it out there, and it's a very different environment than we got started in, for sure. Yeah.
Can I double click on the, like, I think you did a lot of cool math right there, which is like one is like dilution math as you do multiple rounds. So ultimately, like, I think to bottom line, what you're saying is like the average $1 billion company, the CEO owns 12%. Right. So like, I run into a lot of first time founders and they're like, I own 95% of my business. And I'm like, well, how many rounds of funding are you going to do? Like, because the average $1 billion company, you own 12%. The other thing I think I'd love, that's like the subtext of what you said, is like, can you share with us like liquidation preferences?
I was just about to say that.
Yeah.
I was just about to say that. It's like,
like, what even are those?
Yeah. Liquidation preference is basically like saying, okay, as an investor, you can set up a schedule that says, if there's a liquidity event here, I get my money based on these terms. If there's a 1x liquidation preference, that means that they get 1x of what they invested back before anybody else gets any money in the deal. In some cases, especially if you get into trouble or the business is doing great and you need to raise kind of an emergency round, you could have, it's called structure on the deal where there's all kinds of different terms, but just focusing on liquidation preference, you could have a 1.5, a 2x liquidation preference. So the investor, if they put in, $5 million, they might get $10 million back before anybody else gets anything. Well, if you have a waterfall of that, you could get to the point where you sell your company for a lot of money, but by the time it gets to the common stockholders, you may not even make anything.
Yeah.
That's a possible scenario that a lot of people have gone through. Right? And it's not uncommon. I mean, like for preferred shareholders, for most venture capitalists, they're at least getting a 1x. Right?
Yeah. I mean, the YC standard,
like the expectation.
The YC post money safe standard is 1x.
So it's like kind of mind blowing to think that you could bootstrap your company to a couple $1 million in revenue, making it profitable.
Yeah.
You paid yourself like hundreds of thousands of dollars or maybe even more along the way. And then you sell for like a 10 to 15x EBITDA to somebody who just wants to buy a business that they're kind of combining with their thing. You could have a better outcome than someone who sold their business for, $300 million on top line. Because when it all went down the waterfall, maybe they even ended up with, a worse outcome than you.
Yeah. One of my guests on the podcast, he was a bootstrapper and he sold his company to a large financial institution and made millions. And he owned it 100%. And I think like this math is super interesting to highlight because then there's another layer. Like, oh, Evan, what if I collect debt? And like, what if I have debt? Because that jumps the whole stack.
Right. Yeah. The debt comes out first.
Yeah.
The debt comes out first. And, I think there's still a big place for venture capital. So I don't want to make it sound like it's like not something to be considered. It's just that there are certain cases where that ends up being the right tool and certain cases where it doesn't. And when I was a founder just getting started, there's nothing anyone could have told me to make me think that I didn't like need to raise venture capital. Like it was like an ego thing. It was an identity thing.
Yes.
Because every time someone said, look, man, like what kind of business do you really want to build? And that will help you define whether to take VC money or not. What I heard was you're not good enough.
Yeah.
You can't do it. If you can't raise venture capital, it just means you're not good enough.
Yeah.
And so now years down the road, I'm just laughing to myself, hearing myself say the same thing. And I'm like, I don't know if there's anything that can really deliver the truth without actually experiencing it.
Yeah.
But I hear myself saying the same words that were said to me, which is like, there's lots of paths, and thinking about what do you want your lifestyle to be? Why are you doing this? Is it a mission? Are you trying to make money? Are you trying to solve a problem you really care about? Is it just like playing with your friends? Like there's lots of totally valid reasons to start companies. And the more clear you can get on that in a soul searching, point of view, the easier it is to make decisions that you will appreciate from your former self down the road. Right.
Yeah. I actually did the same thing, and I think chasing external validation is a really bad move as a founder. Negative, like with fundraising, you get 100 no's. That's a negative external validation. You get a yes, that's positive external validation. It actually should just be a mechanism. And I think like that's what both of us are saying. Like, I think we're kind of like trolling some of the like the hypey ends of VC, but I always say this to folks. It's like, there are a lot of great VCs out there, and there's not really before the ecosystem existed. There wasn't really a place to go where you could get. It's designed to give you more capital than what you need, faster than what you need it, but it is jet fuel.
Yeah.
And I think that's what we're both saying is like, make sure you have a rocket and make sure you understand the rules you're playing relative to like how you're financing your business. And AI is changing a lot of those rules in real time. And so before, like there used to be a rule, it's like, okay, I'll raise 10 million and I can build a great tech moat. My business will be really defensible. You've built a great network effect business. I don't think tech moats really are going to exist much anymore. So like, like network effects, data moats, like tell me a bit about how you think about moats relative to like your financing background.
Yeah. I mean, it's changing so fast. I think the network effects arguably are a moat. You could say that brand arguably is a moat.
Yeah.
You could say that data arguably is a moat, especially if it's first party data that you're collecting from individuals that are kind of
Mhm.
contained to your
Yeah.
ecosystem.
Private data.
Private data, right? That you have some relationship with the customer where they're willing to continue giving you that data and you can use that to make their experience better.
Yeah.
I think that that's arguably a moat, but as you're saying, it's very difficult to think about
Yeah.
long-term defensibility. Speed, is
Yeah.
in some ways can be a moat, but I think the landscape's changing so fast, we don't even really know how to answer that question yet. I mean, we're emerging into a world where people are using synthetic data to
Yeah.
train models and it's actually working in some
Yeah.
cases. So it's like maybe even that isn't
Yeah.
a moat, right?
I mean,
It's hard
like
to
where
say.
I've centered is I think network effects are like the only rock solid moat.
Hmm.
So like for you're a huge network effect business. Like
Yeah.
do you feel that like your moat has gotten more solid as, like outbound email and, cold calling and other kind of outbound marketing and SEO have like dropped off, like in-person connections more important. And so like the network effect becomes more valuable. Like,
Yeah.
how do you think about it? Cause like you're a true like network effect founder.
Yeah. I mean, I think there's kind of like the in product network effects, and then there's more of like the marketing network
Hmm.
effects. From a marketing standpoint, definitely, like, especially when you're operating in a niche, as you build more of your brand, especially if that brand has an external facing moment
Yeah.
happening, that really creates marketing network effects.
Yeah.
So for us, we have one of our products is a job board. It says powered by Getro at the bottom. Someone's like, okay, we need this solution. What are like these other people using that we trust? They go to their websites, they see that. What's Getro? They click,
Yeah.
and so that you could say is a certain amount of a marketing network effect.
Yeah.
Um,
Do you
yeah,
feel like
and
that's gotten more valuable since AI has come out, or do you feel like you still are like all moats are created? Like, are all moats created equal, or it has like is the network effect moat like
I
the best one?
let's see. I don't think that particular moat for us has changed with the advent of AI. We've been able to move a lot faster in our product development. And so we've been able to
Hmm.
build more. It's like we've been able to kind of build more equity in what people get when they make that decision to buy our product. And so the word of mouth ends up increasing and that becomes an effect.
Yeah.
Um, I think the data still is one of the most interesting moats, in my opinion, even in the age of AI,
Yeah.
because you can speed up the feedback loop of you give me a thing, I give you a better result because of it, faster and faster and faster. Or even you can expand the product suite faster and faster based on what you know someone wants. So if you have that relationship with the customer and they're actually telling you what they need, they're opening up like the back end of what's really happening. That is to me the biggest moat is like I am trusted by decision makers in an environment where they are in a place that they
Mhm.
have budget to spend and they're telling you what their problems are. Because a lot of people who are sitting on the sidelines, they can build the exact same thing as you, but they don't have the ability to get in and have those real
Yeah.
conversations and touch the nerve of the pain. And so they don't necessarily know what to build, or they build it and it kind of rhymes with something interesting, but
Yeah.
doesn't really solve the problem. So to me, that's just what we're always focused on is like go deeper with the customer, build that relationship.
Yeah. Mental health, like you and I kind of talked a bit off camera about mental health. And that's something I love to talk about on the show as a
Mm,
CEO and founder. Can you tell me a bit about your journey with mental health as a CEO? And then what are some of your resources?
sure.
And like, I know we've all been through it. So like, I love like on my end, like I go to therapy. It's been great for me. I've used executive coaches. I have founder groups that I'm a part of. Like, I think being in flow and being in balance is like one of the best things that's created the best outcome for my current business. So
Mm,
like, just from a share perspective, I think having no emotions and working 7 days a week and all this stuff that like is just, first time founder kind of vibes is, you know, something I want to break through on the show a lot. So like that's
yeah.
my end of it. Would love to hear your journey and like the stuff you've been through because I know you've
Mm.
been through a lot.
Yeah, I mean, running this company for 9 years now almost, and went back to back from my first company to this company, and so it's been kind of startup life for almost the last 15 years.
Yeah.
Um, and yeah, I've had a lot of ups and downs in that and have learned lots of different tools. Therapy has been a really great tool, both kind of, uh, therapists that you work with on a regular basis, also therapy experiences like
Mhm.
going to workshops, going to retreats, reading books. I kind of count all in that bucket. And to me, the value of that is to be able to have someone else reflect back to you as clean as possible what they're hearing to create a world where you're not just in your own mind experiencing these things. Because in my mind, it can get pretty complicated and slippery. These things are ping-ponging around, these feelings, the thoughts, right? So having someone to help you kind of like lay that out and play it back and help you go deeper and really learn how to feel the emotions fully has been very valuable to me. Talk therapy, internal family systems have been really, really valuable. Executive coaching has also been really interesting. I think like there was times in my founder journey where I felt like I couldn't afford that, or maybe deep down I felt like I didn't deserve that. And then we had an experience with my co-founder and I were just really struggling to get on the same page, and we're like, we need help. Okay. We found this guy, John Baird, incredible executive coach, and brought us through really like about a year of work, just sitting with us and just being a mirror to us as co-founders. Say, this is what I hear you saying. So okay, what's the strategy? Where are we going? And just helping us to form ourselves together. And that was super helpful.
I did the same thing with my co-founder of my last business. And our coach Susan was amazing, and she was like a repeat founder at scale, and really helped us break through a lot of conflict modes. Before we go deeper, there's a special thing about this podcast.
Oh, great.
Where we play games / do activities. And I have a special one that we picked out for you.
Ooh. I love that. We went to Target.
Yes. So we have NASCARs.
Awesome.
And NASCAR Legos and Ford Speed Champion.
Amazing.
So which one do you want? Do you want NASCAR or do you want Ford Speed Champion?
I like this one a lot.
All right, let's go. So this is to distract you, so I can ask you more interesting questions that end up being more fun.
All right. I like that.
Yeah, I think really getting people in to figure out like your conflict resolution is was a big game changer for me. And on my end, like I struggle with like clinical anxiety my whole life. There we go. I struggle with anxiety, and I didn't realize that I was anxious until I was 30 years old.
Oh yeah.
And
I remember
how I was showing up, but how I was like showing up around people. And I think a lot of founders maybe have the same experience. I didn't even realize, oh dude, there's really cool stickers. I didn't even realize how I was showing up and how I was impacting people.
Yeah.
And I was so anxious and so spun up and so in my own head. And anxiety is about being not present. I wasn't realizing how I was coming across to people. And it took like a big shocking moment in my life to get me to like go to therapy and like work on myself. But it set me up in a great way to be a really great CEO, because I think a lot of us, the more time you can spend having self-view and understand how you make people feel and how you come across, the better communicator you'll be. And the better you'll understand people's motivations. And so I've done a ton of work on that, and I still do a ton of work on that. And like what are some like aside from therapy, what are some like things that you've implemented in your company as a CEO that have like helped your state of mind, helped you like be tuned in from like a balance perspective?
Ooh, I mean, my co-founder Maverick comes to mind. He's really my guru in a lot of ways. Has taught me a lot about being present. I think like if you build a business with a co-founder, having a co-founder that you can be honest with is incredibly important. And I feel like I've learned a lot about the different layers of honesty over the course of running a company. It's really difficult to feel like it is your job to do a good job lying to everyone. As a CEO, I've felt that before. I don't know if you felt that before.
Like, yes, as a first-time founder, it's like, I don't want to let anybody down. I care about what people look. It's like the external validation. But now my mantra is like, Churchill, motherfucker. And I'm like, I will fight on the beaches. They have Europe. I'm going to take this motherfucker back, and I will fight to the last man. Like it's almost some of my like favorite moments as CEO, and the business is really in a tough spot. Because like that's when you can like us repeat founders, like we're like the samurai, like we're like the Churchill mode. And so I've reframed it in my head to do that. Like, I don't know if you've done the same,
Yeah, in a way. I mean, I think where I was going on that is like the idea of being, it is energizing to be authentic.
Yes.
Like you can feel the energy in your body when you are communicating truthfully and authentically to someone. You can feel the energy change in your body when you feel like you have to withhold something about who you are, how you feel, what's going on. So, learning methods of communication that allow you to be in integrity and authentic and honest without
Yeah.
betraying someone or getting into hot water. To me, that has been a big part of the journey of learning how to be a CEO because
Hmm.
you are tempted all the time with these moments of, if you're not aware of your ego, if you're not aware of the fear
Yeah.
you're feeling, if you're not aware of those things, then you end up starting to kind of like feel like you are truly alone. And in some cases you
Hmm.
are, in some moments
Yeah.
you're the one who has to handle this. But I think of this book called The 15 Commitments of Conscious Leadership. I don't know if you ever came
No, I
across that.
haven't.
It's an incredible book. It's kind of a compendium of all of these different other books really and other kind of wisdom practices and concepts that they bring together in a very practical way uh, to basically teach you how to be a conscious leader. And that content has been extremely powerful for me.
Yeah. I think like one of the things a lot of CEOs, and I know I was scared of this, that like, people wouldn't like me, or like my employees will all quit, or, you know, like
Hmm.
folks have imposter syndrome, etc. Um, how do you like maintain authenticity but get over, like, how did you, like, I have how I got past that and how I lead with that, but I'm like really curious, like for someone who's run a business for 9 years and like you built like a pretty big profitable company, like how do you square that circle? And
I
how do
mean,
you actively square that circle?
in a way, like trial and error. I mean, when we started out, I remember it was very important for us to be transparent. Like that was one of
Mhm.
our core values. We wanted to share everything with everyone. And then as we grew, we realized that that becomes harder and harder as the scope of the business increases. The context required to understand what something actually means
Yeah.
increases, and the amount of time it takes to fully explain that context to everyone who has that piece of information increases. And you end up just talking about things all the time and not just moving forward. And so you have to
Yeah.
take certain areas of responsibility of just holding information and responsibly communicating it when the time is right and calibrating around that. So, we had a period where I think we really pulled back on that, um, and maybe even a little bit too much, and like we've
Mhm.
kind of gone in and out. Um, and then there's also been times where I've just hit a breaking point of feeling like I need to communicate this because it is just not feeling good in my body. Like I have to get it
Yeah.
out, and then kind of being like, I have to tell you this thing. And
Yeah.
I remember a conversation with our COO a couple years ago where I was just like, hey, I have been gaslighting you. Like, I'm so sorry. I didn't
Wow.
know how to tell you the truth about this thing. I thought I had to keep it from you, and that was my job. And I was trying to make it feel like everything was okay, and actually it's not. And she was like, I know. She's like, I can feel it, man. You're
Yeah.
not getting away. Like, you're not fooling anybody, but like, you
Yeah.
are my boss. And so it's like, we don't really do as good of a job at hiding these things as we think we are. And a lot of times, like,
Yeah.
just finding the authentic way to communicate it has been the answer I've found. So it's really just about finding the courage to do that. And when you have an executive coach, when you have a co-founder, when you have investors you can trust, or
Mhm.
you know, even like ChatGPT in some ways. I mean, I think there's new tools now that
Yeah.
for people who don't have that kind of access, but they need support, having that as a sounding board, I think is really important. But getting you to the point where you can have that authentic communication, I think is incredibly freeing.
Authenticity, I think, is a huge challenge as a founder and leader across like fundraising, you know, recruiting, everything. And my choice has sort of been of the same, where um I guess like now this is like the fourth venture backed company I've been a part of. And
Hmm.
for me, it's like I used to be like, oh, this or oh, that or whatever. And now I'm like, no, you like opt in to be with me. Like, this is it. Like, I
Yeah, yeah,
actually,
yeah.
like, I think one of my investors called it like radical transparency,
Mhm.
and you're just like, you're weirdly like blunt. And I'm like, no, that's
Mm.
like the New York vibes. And I'm just like, this is like And I
Yeah.
was telling a founder yesterday, because she was going into one of her first board meetings. I was like, you got to M&M rap battle it. And she's
Mhm.
actually doing great, but I was just like, this is like the archetype. Like, that's a vibe. I think
It
everybody's
is.
so tired of like, I'm crushing it and like we're hustling and like, oh, I work 7 days a week and I'm like a machine man. Like, who wants to go work and be a part of that?
Yeah, it sets this crazy expectation. I had a mentor who told me one time, "You can get away with anything as long as you're consistent."
Hmm.
And I thought that was really interesting.
Oh, that's I like that quite a bit.
It's like when people know what to expect from you, they can wrap around it. It's when you're like super erratic and you're bouncing all over the place that
Yeah.
you're unpredictable and it makes people feel, uncomfortable.
But I think as long as you're like, that's a great point. As long as you're like authentic. So like, even if you are the like, hey, we're gonna do the 7 days a week, or we're gonna do this or do that, or stuff that's just like not my style. As long as you're consistent, people can opt in to working with you and opt
Yeah,
into your culture. So like,
right.
how do you think about culture now that you've been building a company 9 years, and how has that
Yeah.
like changed? Because you're basically like probably almost a time traveler at this point.
Definitely. I'm like, I've seen this one before.
Yeah.
Yeah, I mean, I think when we first started, we paid a lot of attention to company values.
Hmm.
And at that time, I was not sure if it was just kind of like, you read this in a book, people tell you you're supposed to do it. You go through the motions, you create some random values, you don't really think about it again. Now, after doing this for years and actually investing time in this over the years, what I've come to realize is that the value statement
Hmm.
is at the top of the pyramid. And the things that flow down from that are the system of behaviors and actions, norms, the way that you treat each other in the company, the kind of like um, rituals that you have and and how you get work done together. And when something goes wrong, you can look back at those core pillars at the top of the pyramid to say, is this aligned with these 5 or 6 things or is it not? And it becomes a decision making system to decide what to do. And there's so many times in a company where there are two directions you could go and they both look like the right answer. So, how do you make a decision
Yeah.
about where to go? And it becomes kind of like your set of commandments of like, okay, should we make this decision this way or this way? Well, let's go look at these 4 or 5 things that we all decided, hopefully together to some degree,
Hmm.
is this aligned or not? And having that does create some relief because as a CEO, it's tempting to think that you need to make every single decision.
Yeah.
That's not really your job, right? That's not your job. Ideally, you're not making all the decisions.
Yeah.
Ideally, you're able to bring people onto your team that you trust to make decisions and then create a context that allows them to make those decisions in a way that feels consistent with everybody else, right?
That's some Jedi ass advice, Evan.
Mm.
Like, I think that takes a long time to like sort that out.
Easy to say, hard to do.
Yeah. Yeah. I was actually talking to someone, uh, like a board member of a pretty like scaled company, literally like today. And they're talking about how, like they were still trying to teach one of their executives, um, about how to like let go of control. And like, I think there's like, it's hard to walk the balance of founder mode.
Yeah, I was just thinking of founder mode. when
Yeah,
you were
yeah. So,
saying
but it's
that.
like, but the business also needs you to like come in and nail it at the right moments too.
It's hard to know how to walk that line, and it really does. Like, one way to think of it is that you shouldn't be expecting things of other people that you are not modeling yourself.
Hmm.
So if you're fired up and engaged and you want to get things done, then like you need to be driving that culture.
Yep.
And as a founder, CEO or co-founder, I don't believe that you can expect the same things of other people
Hmm.
as you're expecting of yourself and your other co-founders. So you have to set the tone. You can't expect people to do things you're not going to do. And the reverse, I think, is that you can't expect people to do all the things that you do.
Yeah.
Because they're not incentivized in the way you are.
Yeah.
You might own 30% of the business. Good for you. Like
Yeah.
that is what that means,
I used to get so frustrated at people I'd work with or when I'd co-found a business, and like and I think that's like a really common thing is to get like fired up at your employees or fired up about
Mhm.
like people around. And then my wife is a sagely repeat founder, and she's just like, they don't own half
Yeah.
the company, you dipshit.
Exactly.
Like what are these expectations?
It's a good thought experiment.
Yeah.
It's like, hey, what if you owned 1% of the business
Yeah.
And like this was, just put yourself in their shoes, and what would
Yeah.
you do? How would that feel? It's a really good thought experiment for anybody who's running a business, just to
Yeah.
keep that in mind. You can hold a high bar, but the why also needs to be really clear. Why are you holding a high bar? What's your motivation?
Yeah.
Do you want that person to be successful? Do you want them to do their best work? Is there a mission of your company that you're really fired up about hitting?
Mm.
Is there a purpose of this goal this month or this quarter that it's going to unlock something down the road? Why? That is so important to keep clear. And as a founder, when you're doing a million different things, it's so hard to zoom out and take care of kind of the gardening exercise of making sure everybody understands the context of the why all
Mhm.
the way through the year. It's one of the hardest things I think of about being a founder of an early stage company. Once the company gets bigger, you have other people on your team who take some of that responsibility with you. But when the company is really small, I think a lot of times it is, it's the founders who need to drive that. And it's important to maintain that. If you maintain it a little bit every month, if you have a cadence, you have even something like OKRs, objectives and key results.
Yep.
It's like, yeah, some people are like, look, that was designed by Google. Like, is that really appropriate for a startup?
I feel like that's like every startup update.
Yeah,
Like
everybody hates
every
it.
every
It
time as
sucks.
every time as a CEO, you're like, I want to create some goals. Like everyone hates like you trying to create goals, and I'm just like, I'm trying to just run the business, guys.
Yeah, and it's like, okay, we really have to take the time to talk about goals again, and we have to take time out of building to talk about what we're going to do. And in a vacuum, it doesn't seem to make sense. Like this seems like a waste of time. But if you roll it up across all the teams to a coherent set of context that we could all look
Mhm.
at together over time, it does actually help things move faster. It does help you learn faster. So it's, you have to drive that. It's like eating your vegetables in a way.
Yes. And then just to switch like back to a little bit on fundraising, just because I'm really curious about this. Like I've done a lot of venture path and I've like built, some of my own businesses without venture. But what like is from your perspective, is there like if you have a different disposition or a different, like mental health, like how does or does like raising venture capital, do you have to have a certain state of mind when you raise venture capital, or like are there different, like, is it more chill to be a bootstrapper, or like I guess that's like what I'm trying to
Yeah.
add. Like you've been in a couple realities of these, so it's
Yeah.
like I'm really curious. It's like, is it all the same, or like I could make arguments for it being more intense, less intense?
Yeah.
Like if you're giving advice to the viewers out there, what's a good vibe for bootstrapper? What's a good vibe for venture founder? Or is
Yeah.
there?
I think that, I mean, my real answer would be it depends on your trauma flavor. It's like, it just depends on what triggers you the most and also what motivates you the most. Understanding that picture is incredibly helpful. As a bootstrap founder, at the end of the month, you either have enough money to pay yourself and your employees what you said you would, or you don't.
Yep.
If you don't, then you have to let people go. And if you don't for enough months in a row, then you potentially have to shut down the company. That is something that takes practice to actually live with, especially when you have team members that have
Mhm.
kids or you have kids yourself, or you're thinking about people who are not just you. If you're really early in your career, if you don't have a lot of responsibilities, like you can take on a little bit more risk and that feels more comfortable. When you're later in your life, like sometimes that's not as possible. And so what is your risk profile? If you know that you can raise capital, you can pay your salary and the salaries of the people that you need to run the first version of this set of experiments to see, whether this business can work. Sometimes that is a better fit, right? So it depends a little bit on the risk that you're willing to take at the early stage. And I do think that, to an extent, venture capital can support with that. I think the $60 million round at the seed stage doesn't fit into what I just said, but I think raising some money, and that could even just be an angel round to make sure that your baseline is covered so you can focus on the business. I think that is something that allows people to just relax into being able to focus on the company. So I don't know if it's like a one-to-one correlation there of, what it's like to run a bootstrap company or what it's like to run a
Yep.
venture-backed company. It kind of depends on the context.
Yeah. And then how do you
Yeah.
think, like, now that AI is letting bootstrappers hire less employees, that obviously like takes some pressure off and takes the burn off the bootstrap business. So like in some ways, do you think bootstrapping is becoming easier and more accessible? And yeah,
I think so. And I say it that way because lately I've been thinking about, I was not alive, or at least I was alive. I don't think I wasn't working in the moment where email started to become a thing,
yes,
right? Where it's like, okay, all of a sudden we can communicate so much faster at such a higher scale. So it's like, all right, well, obviously people are going to work less because, you can just do the same amount of work in less time. That's not what happened. And so I think these tools, when they're all available to everybody, it's unclear to me if there is kind of a arbitrage here for a very long period of time, or if it just raises the bar for everybody. So if everybody can build like the Bootstrap vibe coded thing, then the problem becomes, how do you go get a customer and convince them that your thing is better than everybody else's thing? So
I don't think it's going to be an everyone thing, because I think only so many of us have like 0 to 1 capabilities. And this is different than email or internet, because like email or internet just existed. And then once it existed, it was basically like static technology to a degree. This is more like the microprocessor, which like you and I didn't live through, but it's more like maybe what like our parents or grandparents lived through, right? Like maybe our grandparents, because they were like pre-microprocessor, post-microprocessor. And I think that it just accelerates a bunch of different things. And I think if you're good and you can adapt, if you're good and you can adapt and you can build and you can extract value, you're gonna be in a better spot. I think if you're not using tools, you're not figuring out how to add value, and you're like, hey, I just want to like punch a clock, do my thing, and work. Like I think there's a lot of great people out there that want to just do a job and get home, and I think that's like super, super, super valid. But I think that what's going to change under all that is, it's going to be a tough moment for the market. And the interesting thing is like, there's going to be, and like I think society is more okay with there being like quote unquote, just because like we've experienced it, they're more okay with there being like fractional, like, oh, this plant, like a robot came in the plant, now the plant's automated. But now we have a like lawyers are screwed. There's a lot of like white collar upper class jobs that I think are like very, very in tough spots. And so like, what does that do politically and in society? And
yeah, I think it's a great time to be thinking about entrepreneurship. Like I think that there's one thesis around that, is that there will be more smaller opportunities for entrepreneurs to basically make their salary, so to speak, like make their standard of living with a small, you could almost call it like a micro business. Like if you're able to find, enough customers to pay you $50,000 a year, that might be a better path for a lot of people than trying to go find a job, and it creates a lot more freedom and opportunity, and the tools are out there. And it's, that is one thing that I'm really excited about with some of the new advent of AI tools, is that it creates opportunity for people who have traditionally not been able to access it based on where they were born, how they grew up, what their family dynamics were like. Like it is basically cheap to free to learn almost anything today. And that is incredible. And it doesn't solve some of the systemic kind of psychological challenges that people deal with in those environments, but at least it is a tool that's out there in a way that I think in the past it just was not accessible at all, or it was incredibly difficult to get access to that.
That was a great answer, but I have a very hard, I have a hard puzzle piece I'm putting together.
Yeah, this is quite a difficult. I'm basically just going rogue now because like, there's no way I can read these directions.
Well, you're like going faster than me. Well, see,
this is a perfect metaphor.
I've got practice.
This is a perfect metaphor of entrepreneurship. I'm going faster than you, and I'm making just a piece of nothing.
Have you noticed my Lego man looks kind of like me?
Oh, that's good.
See camera.
I think about like the difference between the compass and the speedometer a lot in entrepreneurship.
Yes.
Like you really need both.
Yeah, well, you could like
Even
wasted motion is a thing, and like that's where it's like, again, I think we've been talking a lot about the raising the shit ton of money or working 7 days a week or all that. I think like looking at that for me, I think the biggest thing is like it seems like that's a lot of wasted motion.
hmm,
Like, and yeah, it's like great. Like becoming like a lot of founders when they're raising, it's like we're trying to become billionaires, right? Like we're trying to become like Zuckerberg, or we're trying to become like any of the companies that are building the things. And so like that requires work and patience with a
yeah.
lot of luck. I think what I'm hearing you say is that like actually the compass is incredibly important. So I wanted to double tap on that.
Yeah, it is really important, and it's also like, how do you know where to point the compass? You have traction, so you're building something, you're trying to solve a problem for someone. They are interfacing with your solution, and they're giving you feedback about whether or not that is happening. That's one way, and then I think the second way is the set of values and the statement of what you actually want to build. And so these things are constantly kind of shifting and changing the ground underneath you, right? And you have to keep recalibrating, coming back to, okay, we've got new information. Do we want to pivot what we think we want it to do because this is interesting? Or do we want to say no to this opportunity because it's not? Like early on for us, our first idea for Getro was to build a talent marketplace. And my first company was a recruiting agency.
Mhm.
We wanted to automate that. That was really interesting to us. We started fundraising, and some of the investors were kind of like, hey, this technology you built is pretty cool. How much would it cost for us to use this for our portfolio companies? And we're like, oh, that's not why we're in your office. But okay, let's talk about it. And so we ended up selling that to a few of the folks that we were pitching
Oh,
to.
interesting.
And then that became a
I've
thing.
never heard of anyone that's like pitched something but then sold that to a VC.
I don't know if I've heard that either,
That's so
actually.
interesting.
Yeah, I mean,
And
it
I mean that
was,
like as a super compliment. Like
well,
that's
it
very
was
unique.
very unexpected. And we were kind of like, we had just come out of Techstars. We
Yeah.
hadn't raised any capital other than that. So the capital was running out. We're like, okay, do we want to keep fundraising? Because if we don't, we're going to run out of money. Or do we want to try to bootstrap the company by selling more of this job board product that's just kind of like totally duct taped together and see if we can make enough money to pay ourselves? And it's like, do we believe in our ability to fundraise more on this idea? Or do we believe more in our ability to sell this version of the product? And we decided, like, you know what, let's try to sell this product. And we went to we were in Kelowna, and then we were in Squamish in Canada, rented an Airbnb, and we just went all in on getting as many warm intros as possible from the people that we knew in our network to try to sell this product. And ultimately we ended up selling like 30 of these over the coming
Wow.
2 months. And that was enough money to support us to keep going. And then we bootstrapped the company for 3 years after that.
Oh wow.
That's how we started. But that was not, we didn't start the company to say, let's build a job board product for VCs, right?
Hmm.
So we had to say, like, okay, let's take a step back. If this works, does it potentially become something interesting for us beyond just this moment? If yes, let's keep going. If not, then let's figure something else out. And we thought it did. We're like, yeah, we have a whole vision for where this could go. And that's really interesting to us. So we kept going with it. But, it was a pivot. It was a pivot from our initial idea.
How do you think about a pivot in relation to um like staying the course or like selling or shutting down the company?
I mean, some of it just has to do with how much energy the people have at the table to keep going.
Hmm.
I think this is maybe like a Paul Graham quote where it's like, companies die when founders give up or something like that. It's like a pretty brutal statement, but it's kind
I
of true.
mean,
It's like
yeah.
the quote is like, companies don't die when they run out of money. They die when founders give up.
Yeah.
And what I've learned firsthand is that, you know, a lot of people are smart enough and capable enough that they can continue to make something work. They can kind of like force it into working just
Hmm.
by sheer force of will. You can't really build a unicorn like that, but you can kind of like keep a small business going like that. And so if you want to keep trying to figure it out, you probably can. And so it's like, do you have the energy to keep trying to figure it out? And is this aligned enough with your values in this moment in your life? And if that answer is yes for you and your co-founder and your team or whoever's a part of that
Yeah.
decision, then like, you can keep going. But also like it's okay to shut things down. And
Yeah.
That's a really hard conversation. Like, I don't have a ton of experience with that. I've tried to support founder friends who have dealt with that in different moments, and I think it's
I mean, for me, it comes down
hard.
if you love what you're doing.
Hmm.
Like, I think if you love your problem, you love what you're doing, you can like will that thing into existence, pivot, do a bunch of things to change the thing. I think if
Mhm.
you're like in like with it, like, like I was talking about this in another time, but for me, I had a business where I realized I was building an insurance company. And then I was like, my wife asked me, it's like, oh, do you want to be the CEO of an insurance company at scale? And I was like, God, no. And then I was
Yeah.
like,
She's like,
uh-oh, I got in a
put
business
the
to help
mirror
small
up.
businesses. And now like I'm on a path to be the CEO of an insurance company. And it's like, that's not my vibe. And now I like
Mm,
love my business and I can just feel the difference in it.
yeah.
So like, that's usually like the advice that I tend to give, which is kind of the same, which is like, you just have to be like in flow with that whole thing.
Yeah, and maybe it's like maybe the relationship metaphor is good here where it's like you can be in a relationship that's not right for you and it's hard to know that all the time. Like you want to
Hmm.
as a person who's good at solving problems and has always done a good job on things, you
Yep.
want to just keep trying to solve the problems. And this is where I think having close friends, having a coach or a mentor, having a therapist that you can just say, "Hey, I've been in this pattern for X amount of time. It doesn't seem to be
Yeah.
changing." And they can be like, "Hey, man, like, what's up?"
Yeah.
And you just kind of need that call out. And it's hard to do that. It can be really hard to do that for yourself.
How do you get space from the business to be able to have a reflection point for the business? Because as a CEO, right, like you're the biggest shareholder.
Mhm.
You say when the music stops, when it goes. Like, how do you give yourself space to be able to come in and make the right call?
Well, this is kind of why, like, I think this is my version of the I don't really buy into this 7 days a week, 24/7 working thing. The way I think about it is like it's important as a founder to make your life bigger than your company. Your company has to be one
Yep.
circle in the concentric circle system of your life. And if it's not, then every decision starts to feel existential. You start kind of being a victim to all these
Yeah.
psychological, kind of fallacies and like, sinkholes, right?
Yeah.
Like sunk cost fallacy is a big one, I think, for founders who worked on that thing for a long time. But when you have other things going on, when you have a hobby, when you have a romantic partner,
Hmm.
if you have kind of a friend group that you're doing something with on a recurring basis, the reason why that's important is because it gives you enough context to be able to look at your thing as only a piece of your life and make a decision about whether or not this belongs here. And that I didn't really get that early on in my career where it's like,
Hmm.
oh yeah, I know that like hobbies are supposed to be important, but like I just have a lot of work to do. Can you please stop like telling me this, and now I see it as like it actually is a tool in the tool belt of the entrepreneur because as an entrepreneur, it's a long-term game and not just with one company, it's a long-term game from all the companies
Yeah.
you're going to start in your career. So it's not
Yeah.
about like this one thing, it's about the bigger picture of
Yeah.
am I working on the right thing right now?
Yeah. And it's like, where do you lend your magic?
That's a beautiful
Um,
way of putting it.
oh,
I
well,
love that.
thank you, Evan.
Yeah.
That's
Where do
why
you
that's
lend
why
your
I have a
magic?
podcast, because I say
Yeah.
beautiful things
I'm
like, where do
glad
you
you
put your
got
magic?
I'm glad
But
you got hired for
it
this.
took me a lot of time to figure that one out myself, right?
Yeah.
And a lot of like getting kicked in the teeth on the learnings for that. And I just there's founders I've invested in, there's founders I help, I coach, and I try to like share exactly what you said. And also like an investor side where it's like, I don't want you like driving the business drunk, i.e., you're so
Mhm.
frenetic or you're so anxious or you don't take any time off. So it's like you can't make the right call.
Mhm.
Like I want to be like, hey, you need to be cool, calm, collected, and you can manage the things and you'll manage your risks. And you need to have a barometer for what is existential versus what is maybe day to day drama. And like,
Yeah.
how do you how have you gotten through to maybe your other co-founders or like talk to the founders out there that maybe need to hear the sagely advice of a, you know, almost a decade long founder in the space? Like how do you know when something's an emergency or not?
Yeah.
How do you sort of have this frame of mind in the right way?
I'll say this. It is a status symbol to be able to take time off.
Interesting.
Like right now, it's there's this cultural moment of like, it's a status symbol to be working all the time. No, it's a status symbol to be able to take time off. Like, it is an indicator that you're doing something well when you can walk away from your thing and it's not dead when you come back. That is the thing that
Yeah.
you're trying to do. You're trying to build a machine that can work when you are not around. And it's important to just check your ego. Like for me, the first time I took a vacation, I remember being the first time I took a vacation without working every day. I remember being like, I got back
Oh,
and
you
like,
have to like qualify that.
yeah,
Like,
because
take
like,
a vacation without working every day
yeah,
because everyone's
right.
like, oh, I just went
'Cause
to
it's
Mexico,
like,
and then you like worked the whole time.
yeah, and I've totally been the guy on every trip that's like on my computer, hey, does anyone want to
Yeah.
co-work guy, right?
Yeah.
Everybody knows that guy. I am totally that guy. Anyone watch this podcast
how
who
have we
knows
not
me would be laughing right now.
how have we not co-worked together, Evan? Like,
We
let's
just, man,
co-work.
like I'll be in the middle of like some random country, in the middle of nowhere. I'm like building a deck, right?
Yeah.
But the first time that I actually didn't do that and I got back and nothing had broken, that was actually a moment to be like, oh, that's great. And maybe in some ways, like, do I matter here? And maybe that's the fear that people have deep
Yeah.
down of like, if I let go, first, if I let go and it breaks, it's on me and I'm going to feel shame about that. People are going to get mad at me. There's a big version of that. But there is another shadow that's like, maybe I'm not as important as it seems like I am. And that is an unconscious shadow for a lot of entrepreneurs.
Yep.
Certainly was for me. But now it's like, we treat vacation at our company as like a religious thing. It's like, if this person's on vacation, you do not contact them. If there's an absolute emergency and you have an agreement with that person, then, do it.
Yep.
And it's their responsibility to hold their boundaries. But we really, really try to make that a thing. And I think it's created a culture where now that nobody says anything about it, it's just how it is, right?
I think it's
And
like
that's very helpful.
I think it's a very good thing, and that's also, as a CEO, like, you're trying to create boundaries and systems where if you don't ever work or take time off, do you want your people super stressed out that they can never take time off or do anything? And then that creates like a very like negative feedback loop into the business. And banking, so I used to be in auditing and banking, and a key control in financial institutions is actually everybody does have to take vacations. You know why?
No.
Because if they're basically, it's a way to uncover fraud.
Oh yeah.
So if someone never
That's
takes
awesome.
a vacation in financial services and they're the only one doing that, like, they can actually mask fraud for like a very, very long time.
Interesting.
So like in government institutions and banks and financial services, it's actually mandated. Vacation is mandated because it's actually a way to uncover and detect fraud.
Well, this is something this is some advice I got early on in my entrepreneurial journey. The corollary for entrepreneurs around fraud is like seeing what breaks so that you can fix it.
Yeah.
When you leave, things break.
Yeah.
What broke? Why did it break? Is the standard operating procedure not there? Did the person have an agreement that wasn't clear? Like, why did that happen?
Yeah.
And it's a great way to just pressure test your business.
I think it's like being curious too, right? Like, we're like, so much of what we're doing is experimentation and being curious to try to like break in and create something that's very unique in the market. And so like, if you have that perspective, like, you absolutely should be building that way. And it took me a long time to understand to do that,
Yeah, it's tough. It takes time to build confidence in I actually do think it is in some ways about self-confidence. It's like, when I come back, if something went wrong that someone tries to blame on me, can I hold that? Can I hold myself in that? Can I hold a boundary around someone else's energy or fear or whatever that they're going to project onto me? And I'm good. That is like, for me, my evolution in personal development, spirituality, mental health is like, I'm going to be good even if you're mad at me. You can be mad at me. You can have that experience. That's great. That's your experience.
Yeah.
I'm having my experience. I'm going to try to be there for you, but like, I'm not going to eat that. Right.
My version of that is trust in myself. So like, this might screw up or this might be an issue, but I trusted myself to fix whatever happens. And I have like, one of the values I created is, I actually believe speed I don't think speed is a moat, but I think speed is a huge asset.
Mhm.
And so I'm like, speed is an asset for us, but as a counter cultural pillar for that, like you can't be speed is an asset and I value perfectionism. You
Yeah.
have to be like, we will fuck up, just fix it really fast.
Mm.
And
And
then
that
like once I internalized that, I was like, oh, like that's my stuff. That's what I'm trying to do.
Yeah, and this is a really powerful concept, the idea of you have kind of every organization experiences these different polarities at different times, like doing everything really well and moving really fast. That's not a problem to solve, it's a polarity,
Mm-hmm.
right? Those are both things that you value and you
Yep.
want to be in balance. And as a value set of a company, you can say, we're actually going to choose to lean a little bit more on one side than the other. So if we're out a little bit out of balance, it's okay to be a little bit out of
Yeah.
balance this way. And it's so helpful for team members because they're looking at these problems and they're like, it's going to be impossible for us to do everything well in this situation
Yeah.
and like do it fast. So, what should I do?
Yeah.
And ideally they can answer that question when you're not there,
Mm-hmm.
right? That's the dream. It's like ideally you are not in the room when they can answer that question and they can just move and you multiply
Yeah.
that by everyone. And that is how companies move fast.
I just hired an amazing COO and
That
he's
is
been
truly,
handling.
truly epic.
Yeah. And he's awesome. And he's been handling
Shout out to all the COOs, man.
and just like people who come in and get their hands dirty with you. But like,
Definitely.
yeah, it's just been so nice because I can really measure how effective someone is by how little of my time they need. And then I'm like, oh, that's leverage. And I think that's like a very interesting thing. So we were talking a bit about, like staying in balance or like cultural pillars and all this stuff. Can you tell me like one time, if you don't mind sharing, like when you like fucked up the culture? Or like like I'd love like Evan's funniest home videos of like bad CEO moments, because I think those are like really good corrections, if you don't mind sharing.
Yeah, let me think about that for a second.
Like I'll do mine while you think, because like this part of this is part and parcel of me sharing too.
Yeah, right.
So for me, I at one of my companies just ended up hiring a bunch of people that I'd worked with and were friends, and I was like, these people are all amazing, whatever. And like I'd come from another place where we all worked together, and so like we were all peers and colleagues. And then inherently, once you're a CEO and a founder, like you carry a different weight, you have a different perspective, and then you're also like not of always the most like sound state of mind, and like you shouldn't, like when you could go and like vent to a fellow product manager at a former job, like that's really different than when like you're the CEO of the company saying a thing. So like that was probably like my biggest mistake early in transitioning to being a CEO. And like how I correct for that now is like you're a CEO in my friend group. I have a lot of different CEO friends, and I'll go and just be like, oh my God, like this sucks so bad today. And then we'll talk about it. And so like I vent to like my other CEOs. I have like a support system. Like that's really what I built, is I like realized, even though these are colleagues that are smart, who I respect, like I don't need to put the weight that like, oh, an investor had a bad interaction with me or something like that on them, because it's almost more stressful because they don't control it, because they're like not in the pitches with you or like not in the board meeting. And so like that's been like one of like my big learnings, is actually like, being transparent, but like insulating and building a friend group outside so that I don't put all that on the other people.
Yeah.
And I like I like lost friendships because of that, and that was like one of the tougher things, because it was like, you're so excited to like build a company with all your friends, just like you always dreamed of. But that it's like, boom, kicked in the teeth by the market.
That's tough, man.
Yeah.
I've definitely experienced that. As you were sharing that, it made me think about, for anyone who's experienced the notion of being a people pleaser, you have this experience of wanting to maintain your control over how someone is perceiving you, at the expense of living in a true reality.
Yes.
And that is really tough on a business, because you're making sacrifices for other people, maybe even your customers, so that you can maintain control. And I have definitely been someone who's done that. For sure. Like the idea of and I think it took a long time for me to be aware of that. And it's still a habit. And like even personally in my life, it's a habit that I always am working on.
Yeah.
But this idea, like, it's important for someone to like me. And so I need to kind of shape their reality.
Yeah.
Right. And that's, I think that's something that every person who experiences that has to reckon with, and it can be super toxic in a company.
That's a good way of saying kind of what I was saying is like you need to minimize external validation or external negative views.
Definitely.
And like the more like samurai you can be as a CEO and like you have your other like we're humans, like you gotta like you have bad days, you have everything, but it's like that samurai is the thing. And I think another negative knock on of that, because like you know, I like had some trauma in my past, and like that's what led me to also have a bit of like the people pleasing or pleasing my board or any of that. And I'm like, dude, that's not what any of these people are fucking paying me to do.
Yeah.
But I also realized I like wasn't doing my team a disservice. Like people had like left jobs to come build with me and to come have a career with me. And like I had a great product and a great company. And if I'm trying to like please others, it's like putting myself subservient to those around me and then putting my team subservient to those around me. So it's just like I've definitely been there, and I appreciate you sharing that.
It's a waterfall. I mean, it's like the great leap of faith that every people pleaser needs to make in order to transition to their next life of not being a people pleaser is to take the leap and to actually try it, and to realize that most people are on some spectrum of I don't really care to I actually want to help you through what you're dealing with.
Yes.
And then a small percentage of people are going to think you're an asshole and they're not going to like you, and then that becomes fine over time. And then it's like all of a sudden you're just free. But it's really hard to take that first big step of taking the risk of saying, this is who I authentically am. This is what I think. This is what's happening in my brain. Like, maybe you're not going to like that, and I'm about to find out, you know?
Sorry, I built my dashboard completely backwards.
Nice. Yeah, me too.
But I don't think it matters. So we're just gonna have a dyslexic car.
Yeah, dude.
Because I am.
This is
slightly.
This is
dyslexic.
actually. This is funny because you could do this with all your guests and basically get like, what is their main kind of psychological, you know, challenging brain space or whatever you want to call it. Like, this is clearly an ADHD vehicle that I'm building right now.
It's actually really hard to do this. It's hard to do this and like focus, and then you get a question, and you're like, and then you're like break a thing. It's like relaxing, to a certain degree.
It definitely made me forget that we're recording a podcast.
Well, don't get back into building your pieces. And yeah, like I think just another way, it's like when you're founding and you have a bigger and bigger team, it's sort of like being part of a family in a way that like you're a parent to a certain degree. And if you don't have a high opinion of yourself, or you don't value your team, or you don't value your time, you're implicitly not valuing the time of those around you who are working with you. And like, it's just all these like hugely negative knock-on effects. So it's like, I've also been there.
Yeah. I really wonder what it would, I don't have kids, and I really wonder what it would be like to run a company with kids.
Well, I have a kid on the way, so I'll let you know. I will let you know.
I'm curious how you're feeling about that.
We will know soon. And yeah, I mean, I don't know, like all this stuff is like about, I think being a good parent or being a good CEO or being a good friend or being a good partner is all about introspection and being able to have like self-awareness, and then also being like first principles in a way that you're like able to get over your own ego and like be willing to have a hard conversation, or have, you know, like put yourself out there, and like that's the move. What's your biggest, like, you want to talk biggest investor mistakes?
I don't know. Maybe let's try it.
Do you want me to share first? Do you want to? Why you think?
I mean, well, yeah, most of my investors are still investors in my company. So,
well, we don't have to talk about like specific people. I just mean like biggest investor blunder in the 9 years while like raising and all sorts of stuff.
I'm happy to.
It doesn't have to be like,
I have things I can
doesn't have
share
to be like, Bill is an asshole.
I'm sure I have things I can share.
Sorry, Bill. Evan's gonna make you a ton of money. It's okay.
No, Bill's great. Bill's great.
Actually, hopefully you don't have a bill, but that was made up. Internet, that was made up. Do not mean to get Evan in trouble. Mine is, I think, initially, like my very first fundraise, I took so much. I took it so much as a reflection on me, and I took every no as like I wasn't good enough, or my company wasn't good enough.
Yeah.
And then the biggest unlock I've had, and that's why it's like my biggest blunder, because my biggest unlock is that like 9 out of 10 times, if not 10 out of 10, it is like on that side of the fence with an investor. Like it might be busy or like working a deal, or their fund might not be deployed, or they might have a specific LP mandate, or they invested in a company years ago like yours that like didn't turn out, or
Mm,
like they're people too. Like they just might not feel energy with you, but like that's
yeah.
not a reflection that you're bad.
Yeah.
And I think investors get a lot of like, this will be a happy part of the session. I think investors get a lot of flack for saying no to people, but
Yeah.
like they also say yes a lot, and you can like put a deck together and they'll give you a couple $1,000,000. And like I think that's a pretty healthy ecosystem thing for innovation.
Mhm.
And for me, just like flipping it, understanding there's a bunch of dynamics at play where they're raising from LPs and they have specific fund mandates, and like it's not me, it's not a reflection of me. And actually, like some of these investors that said no to me ended up investing in my companies later, or like
Yeah.
giving me a customer, or like staying in touch with me years later. Like I've had an investor that has passed on me 2 different companies 4 times, and I still really like him, and we text.
Mm, yeah.
And like
Yeah,
I
so
just like
personal.
abstract it, because you never know what's going on that side of the net. And I don't know, like that's why I would say it's my biggest mistake, because that's the first thing I took personally. And then you
Mm,
kind of get in this like desperado mode of, oh my God, I just need capital in. And like,
yeah.
and you end up on like you end up on the Zoom with like the guy with the headset with the mic down, like
Yeah.
all paths lead to that
That
guy.
is dude, all desperate paths lead to that guy. Man, yeah, that is
He
a
probably has
phenom
like the best DPI on his fund though.
that is a phenomenon that I don't know if I'll ever understand. Um, man, yeah, I guess my biggest fuck ups with investors have been times when I haven't known how much to share.
Mm,
Um, I think that it's always a fine line because,
yes.
investors are part of your team. And especially if investors are on your board or they are, they're kind of considering another investment or
Yep.
something like that. It's
Are
like,
you talking about in the pitch process, or once they've invested, or
I was thinking about
in
more once they've
general?
invested. I mean, I think in the pitch process, you're just trying to get your idea across as best as
Yeah.
possible and, create a vibe with someone. In the pitch process, it's like my learning about that is like if it's going to work, you can do an 80% job
Mhm.
and still be good enough to get the investment. If it's not going to work,
Yeah.
you can do 120% job and still not get the investment. So it's like
Yeah.
I resonate with what you said. I definitely beat myself up for getting no's, but in retrospect, it's like I could have done a way better job than I did, and I
Yeah.
still would have got the no.
Yeah.
So it really wasn't necessarily about that. But yeah, I think no, it's like it's hard to know how to bring investors in. It's hard to know how to ask for help, and not conceptual, like not whether to ask for help or not, but
Yeah.
just literally how to tap into the value of your investors.
Yeah.
And investors are really busy, but they typically, assuming you're in good standing, really want to
Mhm.
help.
Yeah.
And it's hard to know how to engage them. And I think I probably didn't, especially early on, didn't realize how much
Yeah.
help my investors were actually available for.
Uh-huh.
But in order for someone to give you help, you have to ask for it. You have to
Yeah.
tell them that something's wrong.
Yeah.
So if you're just like, "That's good. Yep,
Yeah.
everything's perfect," then they're like, "Oh, great. I guess I'm
Yeah.
gonna like go help this other." Like I hear all these stories of, "Oh yeah, I've just been really in the weeds helping this company reformat their whole financial statement," or
Yeah.
like, "We just found like 25 sales leads for one of our
Yeah.
portfolio companies." I'm sitting there being like, "Damn, like why am I not getting that?" And then it's like, "Oh, you never asked for help. Like you never really said what was going on."
So I love that. And this is such a great topic, because I don't know, like this is what I meant earlier about like the Eminem rap battle. Like your job as a CEO is to like call out and communicate risk and
Mhm,
communicate context. And
mhm,
I think a lot of us, like for me, I was like a really bad communicator with one of my first companies, and I didn't know when to ask for help. I also didn't know how to communicate the status of the business well, or like
yeah,
assert myself well,
yeah,
or and actually I think like literally every investor I've ever had is like wants to get on the phone, wants to help, wants to be like, if it like Vinod Koshila is like more concerned about investors helping, trying to help and then hurting the company, which shows that like
yeah,
most of them actually really want to help and add value. But I think that like the call out you have is that like people want to, like you have to be able to communicate about your company, and you have to be able to like understand when and how to leverage people. And that's incredibly important.
It's a skill, and I think it's also a skill that you are allowed to ask for help with.
Yeah.
You're allowed to you're allowed to sit down with someone and say, "How can I use you the most effectively? Like, how do you want to help here? What are you good at? What are you not good
Yep.
at? How do you engage with companies? Give me some examples." You can go through that entire thing with all of your investors, and they will probably be thrilled to answer those questions because everyone wants to feel like they are doing good, that
Yep.
they're helping, right? And it can be a little bit scary, but I found that people are genuinely open to those kinds of conversations if you just
Yeah.
put it out there.
So one of our common friends, who I won't name for anonymity, is like radically transparent,
Mm.
and like he'll BCC everybody on an email, or he'll just like add people in, or he'll communicate. And I was just like, and like when you're a part of that, or he's talking about it, you're like, this is so unnatural. But then I've adopted that.
Really?
And yeah, and I'm like
That's
about
great.
radical transparency, because I actually just want to shine a light on everything. And
Yeah.
I like want people in there. And I also, that's self-selecting for investors to be involved. But you have to have a really strong vision and a really strong strategy,
Yeah.
because like people are going to come in and try to tell you how to run your fucking business. And you have to be like, no, this is the way, or like, this is the risk, or like, you have to be very Socratic. And so for me,
Definitely.
that's how I've actually adopted it on my end. Instead of
Mm.
being like information protectionist, I'm actually like, I don't know, like I'll email you my whole fundraising deck right now. Like I don't give a shit. Like I know my numbers, I know my things.
Yeah.
Whereas like first time founder me is like, log into this DocuSign and like put in this,
Yeah.
like I can't let my precious
Right. People are going to
slides.
steal my secrets.
Yeah.
People are going to,
Yeah. And like, I think that that's like a really, I don't know, like it's something that ended up like working really well for me.
Mhm.
And that's like, it's almost like information overload, but then my investors that are able to absorb it and still add value and come in and scrum around the ball, they're the ones that we end up selecting to like do a lot of follow on with, or like they
Yeah.
recommend founders for us to work with, or et cetera. And so for me, that's been a way I like really value that, is like, instead of trying to like decide how much, someone, how I communicate or how much someone involved, like I essentially just decide to communicate a lot of everything. And,
Mm.
with some of that, it's like some stuff's messy and I'm going to have to like call and give context, and, like it holds me accountable as well. It's a very unique style, but it's like, it's one I've actually, I'm probably, this is all being recorded, so it's going to be, like I'm going to hate it later. Like I'm sure at some point it'll like annoy me because it creates more work for me, but it's like, it's something I really love. So how do you, like, that obviously is like a huge mistake for you in the past, or like a huge pain point, a growing pain for you in the past. How did you come over it, come past it? Like, what do you do now? Like, how do you know the right amount of information to share with your investors so that they can like come in and help?
Yeah. I think, I mean, one is just the journey of confidence that you talked about also, right? As I've become a more confident leader, I feel more resilient to negative feedback. And so therefore, I feel more empowered in myself to ask for more help, because if I get something negative back, I can hold it and it's
Mm-hmm.
not as painful. That's probably the biggest one, honestly. And then there's like tactical things, which is like, start small, ask for a small thing. If someone responds well to that and they help you, give them a bigger thing. If they respond well to that, give them a bigger thing. It doesn't need to be like this, diving board, double backflip of vulnerability with
Yeah.
your investors overnight. Like
There is oversharing.
it's 100%.
Which if you're
man.
like an appeasement person, you're like,
Yeah,
help me.
yeah.
And
It's
then
definitely
they'll be like,
oversharing.
oh my God, you're fucked. Like,
Yeah, and you need to, and I think that that's actually kind of a vibe thing that you can
yeah,
feel out with each individual.
yes.
It's not going to be, kind of like a blanket thing. So you need to kind of do the work of spending time with each person and feeling out what they want. Some people don't want the details. Some people are not
Yeah.
really available to help. And that's maybe fine too. Like it's great to have investors sometimes that are comfortable making an investment and they're like, "Hey, look, if you need me,
Yeah.
I'll always pick up the phone, but I don't need to be involved in your business to feel like things are
Yeah.
okay."
I
Because
mean,
as a founder, you can't maintain
Yeah.
100 relationships with all
totally.
your investors. So you need a little bit of
Yeah.
that too, but you just kind of test it out.
Unless you had some cool networking connection tool.
Right. Yeah. And I mean, that's true. Like a big part of our business is trying to help people scale that, right? It's
Mhm.
like everybody has networks, everybody wants to help, everyone's busy, nobody wants to do the work. So how do you tap into that at scale? And that's totally what we're trying to build at Getro. Is like, how do investors actually help at scale
Yeah.
while still doing their job?
So what's your what's your biggest, if you could go back in a time machine and give younger Evan some pointers, like what is your biggest pointer that you would give him 9 years ago to try to set him up for success?
Wow, 9 years ago.
Yeah.
There's the notion of self-doubt is present for everyone, but for entrepreneurs can be especially present because you are creating something in the world that doesn't exist. So it is inherently irrational in some way, right?
Yes.
And if it wasn't, you're just copying something that already exists, and maybe that's not really an opportunity. So
Yeah.
there's like almost definitionally some craziness about what you're doing. 9 years ago, going back to the people pleasing comments, right? It's like I didn't have the confidence to drive from my vision and just see whether this would work or not. I think I was too quick to reshape what I wanted to do around what I thought other people thought was a good idea, or even in some cases what customers wanted. Like, I mean, it's maybe a provocative thing to say, but just because a customer wants to buy something that you have doesn't necessarily mean you should sell it to them.
Yes.
Right. It's like, what is the context of that?
That's an astute message for all the AI slop kids out there.
100%, man. It's like, where is this thing going? And you don't always know. So it's totally fine to go try things and go for it. But, at the same time, like taking a step back and saying, I have this notion that when you start a business, there is at least a part of it that is an art project. It's like you see something in the world that you want to be true. You're painting in a way without a paintbrush. You're painting in a different way, right?
Yep.
And then at a certain point, that art project interfaces with this notion of a business and a market and customers and money. And you kind of have to decide, like, is this an art project? Is this a business? Can this thing exist as a business? Do I have to change it around so much that it's fundamentally misaligned with this thing I really care about? And so in those moments of reckoning, just being able to make that decision in a conscious way, I think is an important skill of an entrepreneur to have. And when you're just getting started, you don't even know that these dynamics are a thing.
Yeah.
You're just kind of like doing stuff,
Yeah.
You're just doing your best.
I mean, that's like
And
what
it's
I
fine.
did is I
It's
accidentally,
fine.
like, I set out being like, oh, I really want to help businesses, and I like insurance, and like I was at an insurance company, and then like fast forward years later, I was like, I did not want to be an insurance CEO, and I'm like, man, I could have saved myself a lot of time.
And you learn, and you learn, and you grow, and things change, and that's totally fine. And I think, like, I would also say to myself, you don't need to hold the anxiety of every single one of these turning point moments like it's existential. It's like, yeah, things are changing. You're learning. It's all building toward more things in the future, and there will be other things, and those things will fail and succeed. It's like life is just a bunch of these things. It's not like you ever end up somewhere and you're like, I did it,
Totally.
And then like we die. So I think it's just, it's kind of a trope to say enjoy the ride, but maybe to be more concrete, it's like there are practices, there are skills, there are modes of communication and inner dialogue that actually work well at helping you to enjoy the journey. There are books you can read, and there are people who are very wise about this stuff, and they'll tell you things that will actually change what's happening in your brain, and it'll feel better to be a person in the world. So I'd just say, like, go exploring. When people talk about seekers, it's like, go seek this stuff. It's totally there. It's totally there, and it works. And it's like very good. Like, go find it.
Love that.
Yeah.
What a good thing to end on. Thanks for coming on. And look, there's my car.
Very good.
And then you've got like kind of a city situation here.
I have a land of misfit toys here.
Look, I kind of got like,
you did great, man. That's heck coming along.
It's like I run a podcast where I play Legos. Thank you so much for coming on, Evan.
Yeah, thank you.
You're the man.
Thank you.